What's up, everybody? We're back with another market review. Today is Thursday, July 18th, 2024. This is a trade that we had set up on the ES this morning. Let's go over this. We had the strong level right here at 56.42. The market came down yesterday to it and started bouncing around that level. When the market started bouncing around that level, we said that we would take buys if it broke back above this zone here, 56.67. So what I saw this morning was the market rejected this level, that 56.42, that it rejected multiple times. We had a strong rejection here, wasn't able to break this low. The rejection here came back up. We had a rejection here with a big bullish engulfing candle. Once this candle right here was formed, showing that the bears couldn't take over and the bulls started showing their face, we started looking for long opportunities. All right, so we took a trade right here around 7:30 in the morning. This is before market open because I knew that it had to be quick because market open it was going to be super volatile, and if we didn't break back above this, we were probably going to continue this strong bearish run. All right, so this is how the first trade played out the day. A little bit of down draw here, started going sideways. I think as soon as the news came out at 8:30. Yes, news came out at 8:30. We had a unemployment news today, unemployment claims. So that started moving the market up. It was good for, let's see how the news came out. Unemployment news came out, 222,000 unemployment claims. The forecast was 236,000. So anything below 236,000 was going to be good for the economy because less people filed for unemployment. So when you start to see numbers like that, you start to look for long opportunities. But because remember we had that strong bearish downplay yesterday, this had to be a quick move because that could be short, like a short-term move. So knowing that we had a tight 2-to-1 R&R, had some down draw, almost got stopped out right here. You see, this is why your risk to reward is super important. Our stop loss was here. Almost came and stopped me out with a loss of about $312. I had a $312 stop loss for a $625 take profit. So, boom, to the T, take profit hit. This was at 10 o'clock in the morning. Take profit was hit there. This is the first trade of the day. See that it couldn't break this level here. This is key right here. See this high here? This is a key level because with the momentum that this had, it rejected this level, came back down, retested this previous high here, and then we have to see if it broke above here, we can start to look for longs. It would have to break above this level here and then break above this key level here that it rejected multiple times. Then we can start looking for long opportunities, probably even come all the way back up to this area, which would be a huge move. So knowing that it already rejected these two levels 2 times, we'll see what happened next. Boom, boom, big bearish move, broke all of this previous structure, also broke this key level that we had here. So what could we do now if you wanted to look for it? This is a perfect example of staying liquid in the market. Because see, we were taking buys earlier in the day, and now we have the bears showing their face and showing a lot of momentum with this huge candle. Now we know, or we don't know, there's high probability that the market can continue to go down. So what will we have to look for? Some type of pullback. Pullback would be key to this area. If it didn't hit there, it'd also be key for one of these 2 areas to come back up to retest. If it comes back up to retest this area, we could start to look for sales back down lower. What do we get? Perfect. Retest of here and here. So what could we do now? Another trade opportunity. Could take sales here. Yeah, we have a 50 point, 25 point stop, tight stop. Good R&R. That's a 2-to-1 R&R right here. This was the second trade of the day. Boom. Almost instantly straight to take profit. This doesn't happen every day. This doesn't happen all the time. A lot of people are scared to get in the market with this high volatility because it could easily come all the way back up and retest these levels here. Because we already got a W here, this is like a risk-free trade. So even if this was to stop me out, I'd still be up one for the day. One win for the day. So now we have a 4 R&R for the day. The market continued to dump after that. Went even lower. This is where the day ended up. Remember yesterday in the video, we talked about this bearish engulfing candle. We said we could probably get, if you go back in the video, we'll probably get a 50% retracement around this area. Look at where it came up to. Almost to the area we talked about yesterday. Couldn't even make it up there. That's how you know, that's how the high probability that the market was going to continue to dump down. And we said it yesterday that it was highly likely to go to this area, and it basically tapped it. Tomorrow we could get a small pullback up and then retest this level before we see where we go from there. We might continue to find bullish momentum after that, but called this trade a couple days in a row. This is a perfect example. All right, let's check out gold. Yep, what did we say from gold yesterday? Perfect. Come back up to this level, reject, and come back down. We literally called this yesterday too. This is, I didn't even look at this today, but this is exciting because we literally called this yesterday and it played out to the T. I didn't take this trade because I was already taking the S&P 500 trades, but could have took this short on gold. Beautiful, beautiful move. That's 250 pip move down. This is crazy. To the T. You would have basically had zero down draw to that. That was a good trade. And I didn't even take that. I'm kind of mad now that I seen it, but it is what it is. What could we look for on gold? On gold, since it's playing around this level, it's a psychological level at 2450. We could look for some type of pullback up. Let me see. Let's go up to here. Throw up a Fibonacci. We'll see. Maybe get some type of pullback to this area here. This is a key 50% retracement. So we might be able to get a retracement up to here and then see what happens when we retest this 2450 again. If we blow through it, we're definitely gonna, there's a high chance that we're gonna go to 2425, which would be this level, and it lines up perfectly with the negative 61.8 Fibonacci. This would be a good move down. That's another, from here to here, there's probably 400 pip move. It's a huge move. 319 pip move. Yeah, so we could look for shorts to continue tomorrow on gold, and it's looking like shorts to continue tomorrow on S&P 500 too. We'll check back in tomorrow. Tomorrow's Friday. We'll do a market review. We could probably do a weekly review. We'll see how it'll play out tomorrow. But all right, everybody, safe trading. See you guys tomorrow.